Billionaires and their legal tax loopholes. Welcome back to Be a Baby Billionaire. Let's take a behind-the-scenes look at the world of the mega wealthy. Here, we will shed light on the murky world of tax loopholes and how they benefit billionaires the most when compared to the rest of us, the 99%. While these loopholes are perfectly legal, they often seem unfair to the average taxpayer is equipped with poor knowledge. By educating ourselves, we too may be in a much better position to position ourselves in using the same loopholes that we believed were reserved just for the elite billionaires. If we have all our ducks in order and are eligible, we too can benefit from them. Disclosure: always consult with your accountant or tax attorney for more information, since we are not tax professionals. What we are sharing here is common knowledge from open sources. You will need to do your due diligence and your own research if you wish to learn more about them. 1. Understanding the concept of tax loopholes. Tax loopholes are intricate facets of tax laws that provide opportunities for taxpayers to lower their tax liability. Though these mechanisms exist for all taxpayers, it is primarily the affluent who have the means to exploit them to their advantage. Tax loopholes often exist in the form of specific tax deductions, credits, or exclusions present in tax legislation, which the super-rich commonly leverage to diminish their tax obligations. To further clarify, deductions reduce the amount of income that is subject to tax. For instance, a billionaire may be eligible to deduct the cost of a private jet used for business purposes from their taxable income. Credits, on the other hand, reduce the amount of tax owed. A billionaire could receive a credit for investing in renewable energy, for example. Exclusions are specific items or income that are not subject to tax. Therefore, tax loopholes present legal opportunities for wealthy individuals to supposedly manipulate the system to minimize their overall tax bill. By effectively using these mechanisms, billionaires can conserve a significant proportion of their wealth from being taxed. The exploitation of these tax loopholes may be a contributing factor to the significant wealth disparity prevalent in society today. 2. The role of offshore accounts in shell companies. Navigating the complex world of offshore accounts in shell companies is another way the uber-wealthy manage to keep a large portion of their wealth from being taxed. Sure, we have all heard of them. These financial vehicles, frequently vilified in popular culture, serve as strategic tools for billionaires to lower their tax obligations. Offshore accounts in shell companies are typically set up in countries recognized as tax havens, places known for imposing little to no tax obligations. These tax havens are often characterized by strict privacy laws, making the financial activities of individuals and companies within their jurisdiction hard to scrutinize. By moving assets or entire businesses into these tax havens, the mega-wealthy may significantly lower their tax liabilities in their home countries based on what the law allows. This is made possible because the wealth stored in these tax havens often becomes untouchable by the tax authorities in the individual's home country. For instance, a billionaire may transfer their wealth into an offshore account in a country with low tax rates. This legally shields a portion of their wealth from high taxes in their home country, especially when their company may have many branches in various countries. Similarly, shell companies may be established for business purposes and to legally separate their wealth from their personal assets, further reducing their tax liabilities. However, it's important to note that while these strategies are legal, they often come under public and political scrutiny. Critics argue that the use of offshore accounts and shell companies can be seen as an intentional act to dodge paying a fair share of taxes, thereby contributing to possible societal wealth disparities. 3. The power of capital gains tax. A significant share of the wealth of the ultra-rich comes not from traditional income like salaries or wages, but from investments. These investments can include stocks, bonds, real estate, or other assets that appreciate over time. The profit from selling these investments at a higher price than what was originally paid is known as capital gains. Unlike regular income, which is subject to income tax rates, capital gains are taxed at a separate, often lower rate. This distinction between the types of income becomes particularly beneficial for billionaires. By structuring their wealth so that a substantial part of it comes from capital gains rather than regular income, they can exploit the lower tax rate. For instance, if a billionaire earns money through the sale of an investment, they pay capital gains tax, which can be significantly less than the tax on the equivalent amount of earned income. For the super wealthy, this discrepancy in tax rates can result in substantial savings. This strategy of maximizing income through capital gains not only allows billionaires to grow their wealth, but also helps them preserve it by reducing their tax liabilities. But it's worth noting that this advantage isn't exclusive to billionaires. Anyone can potentially benefit from this lower rate if they earn income from selling investments. However, it is billionaires who, by having substantial assets to invest, are in a better position to leverage this aspect of the tax code. Despite being perfectly legal, this disparity in tax rates between wages and capital gains has drawn criticism. Some argue that it disproportionately favors the wealthy and contributes to income inequality. Nevertheless, as long as these laws remain in place, capital gains will continue to be a powerful tool in the tax strategy of the mega wealthy. 4. Trust funds, not just for heirs. Contrary to common perceptions, trust funds aren't exclusively reserved for the transfer of wealth to future generations. These financial vehicles can be strategically utilized by billionaires as part of their estate planning. By placing considerable assets into a trust fund, an individual can legally separate themselves from those assets. This act results in a reduction of their wealth on paper and therefore a decrease in their taxable estate. The assets held in the trust fund can continue to generate income, but it's the trust itself, not the individual who formed it, that is responsible for any associated taxes. This practice can provide significant tax savings for billionaires who would otherwise be subject to higher tax rates on their personal income and wealth. In addition to reducing their overall tax liabilities, trust funds provide another key advantage. They offer a greater degree of control over how the wealth is used, even after the wealth holder's death. This can be particularly useful for those who want to ensure their wealth is used in a certain way, such as supporting philanthropic causes or ensuring the financial security of their heirs. Despite being a legitimate part of estate planning, the use of trust funds is not without controversy. Critics argue that it allows the ultra-wealthy to circumvent their fiscal responsibilities, thus exacerbating wealth inequality. However, as the laws currently stand, trust funds remain a potent tool in the tax planning arsenal of billionaires. Remember, the rules and regulations regarding trusts are complex and require expert guidance for their setup and administration. Hence, the use of trust funds as a tax strategy is generally more feasible for the mega-rich, who have access to professional financial and legal advisors. 5. Incentives and deductions. Billionaires' best friends. The tax code is not just a collection of rules dictating what we owe to the government. It's also a tool for economic policy filled with deductions and incentives designed to encourage certain activities like homeownership, starting a business, or giving to charity. These provisions, while available to all taxpayers, can be particularly advantageous for billionaires, who often have more opportunities to leverage them. Charitable donations also come with considerable tax benefits. Taxpayers can deduct the value of their charitable contributions from their taxable income. This deduction is advantageous for all taxpayers, but billionaires, who are often in the highest tax brackets and make substantial donations, can see especially significant tax savings from this provision. They may also create and contribute to their own foundations as well. In addition to deductions, The tax code includes various incentives designed to promote investment in specific industries or areas. For example, there are tax credits for investing in renewable energy or opportunity zones, areas designated by the government as in need of economic development. While these tax incentives and deductions serve legitimate policy purposes, they also provide the mega wealthy with opportunities to significantly reduce their tax liabilities. The scale of the savings can be vast for billionaires, given the size of their taxable income and the range of their financial activities. As such, the exploitation of these tax incentives and deductions forms a crucial part of a billionaire's tax strategy. They are not only following the letter of the tax law, but also using the spirit of these incentives to preserve their wealth. Yet, this practice, despite being legal, has been a subject of much debate and scrutiny due to its contribution to possible wealth disparity. 6. The lobbying effect, influencing tax laws. In the dynamic sphere of taxation, billionaires hold a unique position that enables them to not only utilize existing tax laws, but also shape them. Leveraging their considerable resources and influence, they often engage in lobbying efforts, a legal practice where individuals or groups advocate for specific causes or policies. In this context, billionaires and their corporations often lobby for tax legislation that aligns with their financial interests. Lobbying in itself is a constitutionally protected right under the freedom of speech, allowing citizens to express their concerns and interests to their representatives. However, the scale at which billionaires can lobby presents another avenue for them to sway tax laws to their advantage. By funding campaigns, contributing to political parties, or directly lobbying lawmakers, they may wield substantial influence over the legislative process. For instance, the ultra-wealthy might lobby for the inclusion of specific provisions in new tax laws that benefit their businesses or personal finances. Similarly, they might advocate against legislation that threatens their wealth, such as increased tax rates or the removal of favorable tax loopholes. This can also include pushing for the continuation or expansion of advantageous tax credits, deductions, or exclusions. Furthermore, it's worth noting that lobbying isn't limited to domestic legislation. Billionaires may also exert influence over international tax treaties and regulations, further molding the global taxation landscape to their advantage. In essence, the power to lobby gives billionaires a voice in shaping tax laws that go beyond merely exploiting existing tax loopholes. It may add another layer of complexity to the discourse on tax fairness and wealth inequality, highlighting the need for scrutiny and potential reform in the system. However, it's important to remember that lobbying, at its core, is a democratic tool meant to ensure the representation of all interests. The debate often centers around whether the scale and influence of billionaire lobbying tip the balance too far in their favor. 7. Calling for reform, closing the loopholes. The presence and exploitation of tax loopholes, particularly by the billionaire class, has sparked vigorous discussions around tax justice and wealth disparity. A strong call for tax reform to rectify these issues has emerged from various quarters. Yet instigating tax reform is a multifaceted endeavor, demanding a delicate equilibrium between divergent interests and policy objectives. The primary aim of such reform is to establish a tax system that is both fair and efficient. Critics argue that the current system is regressive, with billionaires often paying a lower effective tax rate than middle-class workers due to the availability of various legal loopholes and preferential tax treatments discussed earlier. Therefore, closing these loopholes is seen as a crucial step towards progressivity, ensuring that those with the most resources contribute proportionately. Many proponents of reform suggest eliminating or reducing tax breaks that primarily benefit the mega-wealthy, such as the lower tax rate on capital gains and the ability to shift assets offshore. Some also call for more transparency in the use of trusts and shell companies, as well as stricter rules on the deduction of depreciation on real estate properties. Tax reform advocates also propose the introduction of policies that could mitigate wealth inequality, such as a wealth tax or higher marginal tax rates for the ultra-rich. These measures aim to ensure that billionaires pay a fair share of taxes relative to their enormous wealth. Many suggest a flat tax rate across the board of 20%. However, initiating tax reform is far from straightforward. Any proposed changes need to balance the desire for fairness with the potential economic impact. For instance, reducing tax incentives for investment could slow economic growth or dampen entrepreneurial spirit. Similarly, a wealth tax could discourage innovation and wealth creation, while higher marginal tax rates could incentivize tax evasion. In conclusion, closing tax loopholes and achieving a more equitable tax system is a nuanced and complex challenge. It requires careful consideration of the economic and societal implications, as well as a robust debate involving all stakeholders. Regardless, the need for reform is increasingly being recognized, with the hope of creating a tax system that contributes to a more balanced and just society. Subscribe with us and learn. If you find the information in this video valuable, please subscribe to watch more videos like this and also share it with family and friends. Your support will help us create many more high-quality videos like this. Write "I subscribed" in the comment section below and let us know of topics that interest you in the subject of finance. Please hit the like button and the notification bell to be notified. There's more waiting to be learned in our next video. Please click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.